Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is March 31 and we're starting from euro-dollar pair as usual with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The pair tested 1.0832 at a time when MACD line was just starting to move below zero, which was a good reason to sell. However, euro spurted upwards, testing 1.0850. At that time, the MACD line had already moved above zero, which was a good signal to buy. This resulted in an upward movement of around 35 pips. Euro rushed up on Tuesday due to the Eurozone's consumer confidence indicator, a slight fall in inflation in Germany, and downward revision to US GDP growth at the end of the last year. Today, Germany will release a report on its labor market, but much more interesting is the data on consumer prices in the Eurozone. A rise in it could trigger a jump in euro, while a drop in the unemployment rate and hawkish comments from the ECB President Christine Lagarde could bring the price to new monthly highs. US statistics in the afternoon are no less interesting, as the core PCI index and data on personal income and expenditures could bring back demand for dollar, provided that the numbers are positive. Consumer sentiment and expectation indices from the University of Michigan could also affect the direction of euro-dollar pair, as long as there is a strong divergence from expectations. For long positions, buy euro when the quote reaches 1.0911 and take profit at the price of 1.0945. Traders will see gains if the Eurozone published good statistics. Price will also rise if there is another inflationary surge. However, when buying, make sure that the MACD line should be above zero or is starting to rise from it. Euro can also be bought at 1.0888, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.0911 and 1.0945. For short positions, sell euro when the quote reaches 1.0888 and take profit at the price of 1.0862. Pressure will return if there is no bullish activity around the daily high and if the Eurozone releases weak economic data. However, when selling, make sure that the MACD line should be under zero or is starting to move down from it. Euro can also be sold at 1.0911, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.0888 and 1.0862. Next stage, next major. We've got a trading signal for GBP USD pair. Dimitrios Tsapas presents. Early in the European session, the British pound is trading around 1.2400, above the 21 SMA and above the uptrend channel formed since March 7. In the last few minutes, the British pound reached a high of 1.2421. However, as it could not sustain this price level, we are seeing a technical correction. In case the pound falls below 1.24, we could expect it to retrace towards the 5/8 Murray level, located at 1.2329, or towards the 21 SMA, located at 1.2336. If the British pound resumes its bullish move, it could face strong resistance around 6/8 Murray, located at 1.2451. A daily close and sharp break below 1.2329 5/8 Murray could be a sign of a reversal and trend change, and the pound could reach the area of 4/8 Murray level at 1.2207. If bearish pressure prevails, the instrument could decline to 1.2164. 200 EMA. Below the 200 EMA, located at 1.2164, it would be clearly established that the British pound is in a bearish phase and GBP USD could fall to the psychological level of 1.20. And finally, hit the low of March 8, located at 1.1801. On March 17-20, the Eagle indicator entered a bearish phase, which is likely because this divergence is showing that the market volume is running out, so a strong technical correction could occur in the next few days. We've got a potential bearish movement for silver that Yakimowicz describes. Silver has been trading sideways in the last 10 hours. And we see potential for the downside breakout and downside correction to start. Due to the breakout of the mini consolidation to the downside, Petar sees potential for the further downside movement. Downside objectives are set at 23.70 and 23.40. MACD is showing bearish divergence, which is good sign for the further downside movement. Key intraday resistance is set at the price of 23.90. The next in line is Lowry Bailey with AUD-USD pair forecast. Let's have a look. The Australian dollar broke through the upper limit of the neutral range that started back on March 17. AUD climbed out of this range this morning. It could fall to the lower limit of the range, like it did on the 23rd. But the ascending Marlin oscillator creates an advantage for the growth option. At first to 0.6790 and then, under the favorable circumstances, to 0.6873. On the 4-hour chart, the price is in an active position to rise above the indicator lines. The Marlin oscillator is growing at an even angle, with an optimal speed to enter the overbought zone. After consolidating above 0.6730, we can expect the price to rise further. However, this plan can potentially be hindered by the price breaking through the MACD line below the 0.6693 mark. That's all for today. See you online soon. Good luck.